Welcome back, everyone, to the HUBB US market update. Another crazy week for markets, and along with some crazy moves in stocks as well. Who better to break it all down but Rob Roy, the Chief Market Strategist at Elliott Wave Options. Happy St. Patrick's Day, Rob.
Back at you, Scott. Like the green shirt.
Thanks, mate. Appreciate it. Rob's going to be using HUBB software platform during his analysis today, and you can check that out at hubb.com in your own time. We've got that link below. In this show, we're going to cover major US markets, including the S&P, VIX, the Dow, the Qs, interest rates, and the dollar. Now, after that, we're going to also dig into Google, Apple, Amazon, Meta, Nvidia, and of course, Tesla. We also take a look at an interesting week for Bitcoin and the CPI report. Make sure to throw those questions in for us, because Rob's going to be hanging around at the end to do some Q&A for you. Before we get started, don't forget to click on those subscribe buttons below and the like buttons as well. They all help and gives you more information on HUBB as well. And also at the end, we're going to be adding the chapters for you as well to make it very easy for you to look on the recording. Okay, Rob, let's jump into it. Let's break down what you've seen in the markets and how the US market outlook was this week.
Yeah, so there's not much to talk about since last week, right? There's been no real news in the markets. Holy cow. We chatted last Friday, and then over the weekend, we didn't know if all hell was going to break loose on Monday, and luckily it didn't, but awfully a lot to talk about. So taking a look at the chart, everybody see the chart okay?
Yeah.
Okay, we no longer have a qualified five-wave impulse pattern in the market, but was really interesting, which you don't see very often, is we had this upward zigzag pattern that we've been talking about for a while. So we go up here to the 61.8% level, and then from that point we have a triangle. So we're doing all kinds of Elliott wave patterns here, corrective patterns, flat zigzags, and triangles. We have the triangle right there at the 61.8% level, which starts a downward zigzag pattern in the C wave of an upward zigzag pattern. Now check this out. So all the craziness that's going on with the banks, and we'll talk about the different news, et cetera, when we get to interest rates and all, but look at this, right down to that 100% extension within that upward C wave, we have a completed downward zigzag hitting exactly at the 100% level before retracing and moving back up. We moved back up yesterday on strong volume. So it's something you don't see every day, Scott, where you have a downward zigzag within an upward zigzag. We have complex C waves all the time, but you're normally looking at these triangles and things like that. So with the triangle and the downward zigzag, something really interesting. But following Elliott wave patterns, looking at the Fibonacci stuff, you can get a really good idea about where the markets are going to move to. Now, the key is that 100% extension is right here at this 380 level. And I posted a comment to our subscribers at evotrader.com that 380 needs to hold. And if 380 doesn't hold, then everything changes. But for now, as hard as it is to believe, with all the different news events that we've had, the scare with the banking sector, the upward pattern is still intact. As long as we can get that 380 level to hold, we're okay to the upside. So let's take a look at the VIX real quick, looking at the volatility index, and can see that it's been a bit crazy. Look at those bars. That's intraday volatility there on each of those bars. So moving to the upside, we came back down yesterday, back up today. I do want to share this with you. I'm going to go back to the S&P real quick, because I wanted to look at volume yesterday, and you have to wonder, where did this come from when we had this kind of a amount of volume moving back to the upside? And then looking at the moving averages, bring the 10, 30, and 50. Yesterday, we moved back up to the 50-day moving average, got above the 10, which is that lime green line. But this is certainly not a sign of all clear by any way, shape, or form. And just the fact that we held 380, a positive, getting back above the 10-day moving average yesterday, a positive, but we hit the 50-day moving average. But notice we're back below the 10-day moving average. So even though it feels like things may have settled down a little bit, I think caution is definitely the theme in the markets right now. A couple other markets show you real quick. Want to look at the Dow, because when we take a look at the Dow and the NASDAQ, actually I'm going to show you the Qs first. Let's take a look at the Qs, because if you're looking for something along the lines of bullishness, how about this? Talking about this nuttiness with interest rates, et cetera, and we'll show a chart of interest rates here in a few minutes, rates going down is actually positive for the tech sector. And when we add the Elliott wave pattern on, how about that for a pattern, Scott? Really,
Wow.
you can't find a much better upward Elliott wave 5-wave pattern than this. And so, we have a completely mixed market, but interest rates going down is always positive for the tech sector. You mentioned all the stocks that we're going to take a look at, which are certainly influenced by rates, but that's a pretty impressive pattern. And if you're looking for something bullish to hang your hat on, totally different picture here. 10, 30, and 50-day moving averages all moving to the upside. The market's above all of them. We got a little bit overbought yesterday, so a bit of a rest today was okay, even though some of those stocks you mentioned were actually to the upside. And then we just come over here and look at the Dow, and it's a totally different picture. So if you have some answers, I'm open to hearing what you think is going on here, because look at that. Now we have a very well set up downward 5-wave pattern on the diamonds, the DIA. So we're moving down in a wave 3 on the diamonds, and then moving up in the Qs. So we have a tale of 3 different markets right now. The S&P doesn't really know what it wants to do, holding at a level that it needs to hold at. The Qs look really good. And then the Dow looks like it's ready to completely fall apart, and it's sitting right here at the last bastion of support, in my opinion. If we don't hold this 320 level on the Dow, as represented by the diamonds here, then look, there's nothing. An expression we like to use is Katie bar the door. It was a vertical rally to the upside, so that means there'll be no resistance on the way down. So how you sort all this out, I think caution and patience is key here. But if you're looking for a place to go long, I think you got to stay with the Qs, stay with the tech stocks, and see where things go from there.
Great. And anything else you want to look at across on the markets?
Sure. Let's take a look at the 10-year. And here's the coordination with interest rates with the tech sector that we just talked about, sitting down here around 34. And I've talked about this a lot in commentary to our subscribers, that we wanted rates to come down. We certainly don't want rates to go significantly higher. Note that the Elliott wave algorithm is turned on, but there is no 5-wave pattern here. So we're in corrective mode, and we're sitting down here at a support level, and interest rates coming down is kind of what you want. I don't really think you necessarily want that vertical move down in rates, because that means money is pouring into bonds. Prices and yields go in opposite direction. So for rates to come down like that, prices have to be moving up, and that means there's fear in the equities market. People are leaving the equities market, moving into the bond market. That wasn't really the reason we wanted rates to go down. However, rates have come down, and the tech sector and the Qs have benefited from that. And then the dollar, I think the dollar is calm. If you're looking for a calming influence in all the craziness that's going on in the markets right now, I think you need to look at the dollar and say nothing really weird is going on in the dollar. It's just stable. And wouldn't you think, Scott? I mean, if all hell was really about to break loose and the bottom was about to fall out, that we were seeing some sort of a significant move in the dollar. It doesn't seem like globally people are worried about it. People aren't pouring into the dollar from all over the place. So you look for the cues if you're bullish, and if you're concerned about everything that's going on, the fact that the dollar is really pretty stable. It isn't a 5-wave to the downside pattern, but that's not significant. As long as the dollar stays above 96, we're in a strong dollar scenario there. So man, lots to talk about, but as far as where we go from here, certainly some conflicting signals from the different markets.
Yeah, it looks like we're in a bit of a precarious position. And before we jumped online here today, you and I were talking about the volumes, and you touched there on the volumes before. Like today was a very big market on close volume. I was saying, I think it was either 3.4 or 4.3 billion dollars to the sell side. You had quadruple witching, you had indices rebalancing for the quarter. That's huge volumes. And when we see things like that, what do you think we see, Rob?
it is difficult on an expiration day like this, when you have a witching day like this, to know. Normally, when you see that kind of volume to the sell side, you say that's probably not a positive sign for the beginning of the week. But when you have it on a witching day, and we also had the rebalancing, the kick Signature Bank out, over the weekend, we had the SVB news that we talked about last Friday, and then waiting to hear. And there was all sorts of financial commentary, like if Fed doesn't step in and backstop these depositors above 250,000, it could be a bloodbath on Monday with some of the headlines that I saw. And then the Federal Reserve came in and said they were going to backstop all of the depositors in SVB, and the futures were up over 400 points. And then the Signature Bank news hit later on, and back down we go. And what about, yesterday or Wednesday, we had Wells Fargo. They're raising capital too. That's all SVB said initially, was that they felt like they needed to raise capital to shore up their balance sheet. And then there was a run on the bank. And boy, we could really get into talking about the Federal Reserve and their impact along this as well. But they've created this scenario. We had easy money too long, and they're raising rates so fast, and they've caught all of these banks off sides on the speed in which rates are going up. And so if people start to come and get nervous and scared and take their money out, then these institutions have to sell their bonds and treasury holdings, et cetera, in order to have enough capital to meet the redemption requirements. And if you hold a bond until expiration or maturity, as they call it in the bond world, you get the face value back. But they move around with the markets. And so if they're at a loss, which they are clearly, when interest rates are going up, prices are going down. So then they have to sell to meet those. And if you're continuing to sell at a loss, then it creates a scenario where you become insolvent really quickly. And that's what's been going on. And so now the Federal Reserve, that, in my opinion, created this issue by keeping the easy money policy too long, saying that inflation was transitory, which was clearly not right, for so long, and now raising rates so fast. They've created this scenario, and now we're going to have to be dependent on them if things really get bad to ease us back out. That's pretty unsettling, in my opinion, Scott.
Yeah, definitely. And we also saw news there after market of First Republic is going to be issuing new shares to raise money from other banks and PE firms. So I think we've got another interesting weekend ahead of us, that's for sure. And we'll see what comes out of it. And we've also got a rate decision next week too. It's going to be another interesting week.
Yeah, and so the Fed fund, I'm showing the chart of First Republic. That's not a chart that you would like to see if you're a shareholder of a particular stock. There's First Republic. Look at that move to the downside. You went from 140 a couple of weeks ago, and now you're trading down around 25. That's a pretty significant hit. And so it was interesting with both First Republic and talking about Credit Suisse, right? The same thing. Here's a chart of Credit Suisse Bank. Looks very similar. And the negative news there was that the Saudi National Bank said they weren't going to support them anymore. They weren't going to give them any additional funding. But then the Swiss National Bank came in and said, yeah, we're going to give them $54 billion. It was the way they throw these billions of around, like we used to throw, hundreds around. It's nuts. And so everything seemed a little calmer yesterday. Okay, settle down. And then it's all of a sudden, well, wait a minute. If they're after raising that much money, how's that going to dilute the share value? And so I think there was a little bit of a back to reality today in the markets. And I think even though it was witching expiration today, I think that's probably what you were seeing, Scott, with that massive sell on the close order today.
Yeah. All right. So let's dig into the stocks you've picked out for this week. And listen, there's some of the similar names from last week, but they're so interesting to look at right now. They're the ones that've got the moves. So let's dig into your side of your stocks of interest. Let's dig in with Google first.
Okay, we'll take a look at Google, and boy, is FANG back, Scott? What do you think? I mean, these are the old FANG stocks, right? So here's Apple, or excuse me, here's Google, Alphabet, moving back to the upside, and we actually had bullish alerts on this for our subscribers. We took them off yesterday, a little bit more of a movement to the upside today, but in this current market, when you have that kind of a move, I think you need to to take that. You can see what happened over the past 3 days, just massive move to the upside. And we were talking about this support that needed to hold at 90, and it really did. And then you get some sort of a vertical move like that. Look how overbought we are, though. Is that going to play into your selling the close order there? That is significantly overbought. One of my rules is no security in any time frame is very far away from the 10-day moving average. And that is a good example of a stock being overbought as far as separation from the 10-day moving average. So I think we have a little bit of the best thing to happen for Google, I think, would be to go sideways. So could have maybe milked a little bit more out of that by holding it another day. But with that move yesterday and generating a really nice gain in a trade in this current environment where you never know when the next shoe's going to, what do you think, Scott? Do you think we're done? Do you think like from here, there's not going to be another bank to show up? That's pretty difficult for me to comprehend. I don't know what your thoughts are.
No, it's with everything that's happening in Europe and everything that's already happened in the US and is still ongoing. There's no way that we've already solved all the problems that they're having. It's like there's a run on the smaller banks right now in the US. Similar things going to be happening in Europe. We haven't even touched on Asia. Like, surely there's the same sort of situation happening there as well. So it becomes more of a global thing, probably. But as we know, it sort of creeps up on you overnight.
Boy, has this, we always do at the end of at the beginning of the year, we do a black swan forecast, like what potential black swans could come out. And boy, 2020, we really nailed the Corona thing. I was like, there's this little virus thing in China that we ought to keep an eye on. And then, Corona COVID happens. And so that worked out really well. But for this year, I did not see something similar to this occurring. And then how about Janet Yellen coming out after the SVB news and saying, yeah, and we're monitoring a few other banks as well, without naming them. So everyone is thinking what you just said, as far as if your money's in a bank, it's my bank. Are they watching my bank? Is it next? Yeah, it's crazy.
Yeah. All right. So before we move on to the next stock, don't forget to click on that subscribe button below and the likes, because there's some great feedback here from people. All right, let's have a look at Apple.
All right, we'll take a look at chart of Apple, and not quite that vertical move that we saw in Google or Alphabet, however you want to view it. I still like the old name Google, but sitting here above the support level at 150, as long as Apple holds here, maybe some of the banks should come to Apple for loans, because they're the ones sitting on all the cash, right? I mean, their cash coffers are amazing. We have a little bit of resistance here, so when you take a look at this, it's almost a bit of a channel here between 150 and 155. So some resistance there, but as long as we stay above 150, Apple looks okay. And this back and forth of what's the next bank going to show up, and the scariness going back to Lehman and the financial crisis of 2008, is that happening again? But then you see some of the big stocks, they're still holding in there. The generals are the last to fall, and they haven't yet. The charts are looking good that we're taking a look at here. And even if we aren't able to break above this resistance area, no LA pattern here, if we're able to break above this resistance level here, as long as we hold 150, Apple's okay.
Okay, and we've touched on, we haven't spoken about it yet, but Amazon.
Yeah, take a look at Amazon, or is it? I'll bring it up here, and we're still long on Amazon. So you take a look at the movement there. Pretty nice move to the upside. We had a bit of a descending triangle. We're thinking that which way is this going to go? So with support there at 90, this set here of lower highs, and it looks like we're going to make a break one way or the other. And clearly it was an upside breakout. A bit of a surprise to me. If we're going to go into a significant recession, and probably the biggest or number one retailer out there is breaking out to the upside, so you have to, is the fear warranted? Is something else going on? But that's impressive with that break to the upside there. We still are in a qualified 5-wave to the downside pattern, so you have to take that into account, that this breakout of the triangle could run into resistance up here around 110 if it's even able to make it up that high. So it's not all clear yet on Amazon, but you certainly have to be impressed with the upside breakout up there, again, with everything going on and fears of recession, etc.
Yeah. You touched on Meta there before. Again, let's take a look at the chart there, because it has had a nice rally this year, but what's it looking like right now?
Yeah, that's that's a pretty impressive move there, and a qualified five wave to the upside pattern, and we've just been trucking it. Man, they were about to write this stock off not that long ago. Remember, Scott? I mean,
Yeah.
back in November, we're down around 90, and everybody is picking on them for all the stuff they're doing in the metaverse and all these things. And have they made a huge mistake? And then next thing we know, and the stock is more than doubled in price in just a few months. And we're sitting right here at some resistance at the 200 level. We're in a current wave 5. We have a target up there around 230. You look at the moving averages, so you look at the 10-day moving average, tiny bit overbought, a little bit of consolidation here at that recent wave 3 high, but it certainly looks poised to go up and hit that wave 5 target. And one of our favorite confirming indicators is the DMI. That black line there is the ADX, that tells you the strength of a move. And you can see it's staying pretty solid above the level of 40, which is a key level in that indicator. The green line there is the positive directional indicator. That's a representation of strength of buyers. The red line is the negative directional indicator, which is the strength of the sellers. Clearly, the buyers are in control. And with that, the ADX staying stable, it's showing that there's strength to this move. And when you look at just the DMI as an indicator, obviously you don't ever want to rely on one single indicator, but that is a confirming indicator, leads you to believe that there was legit strength in this move. And so the opportunity to break above that wave 3 and go hit that wave 5 target is still in place. So these are places that we're identifying here, that if you are concerned with what's going on, these stocks are holding in there extremely well and making nice moves to the upside. And that, again, is because of that chart that I showed you of interest rates. Tech stocks outperform when interest rates come back down. And so that's the tie-in. That's what's going on.
Been a lot of analysts this week very positive NVIDIA. Listen, they have been for a long time, but this week there seemed to be a lot more talk about it. I saw a couple of upgrades up there and out there and so forth. How's the chart looking there?
So here's NVIDIA, and we were long this as well until yesterday, and may have taken this one off a little bit early for our subscribers. You can see that we have the movement to the year. Clearly there was resistance there at 240, and then we make that big break yesterday above 240. But if I put the moving averages on, you can see that just in yesterday's move on the close, we were getting a bit above that 10-day moving average. So you look at it, and as the Monday morning quarterback, and gee, I wish I would have waited one more day. But as I said, in this environment, when you just don't know what news you're going to wake up to, which is the next bank that's going to be in the news, you get a breakout like that, and you get a nice gain, you're going to go ahead and take that. So we are a bit overbought, but that is a very pronounced break of resistance there at 240. The only question is, does it come back and test that breakout? You know, what was once resistance becomes support? Will it hold as support there and then we take off, or does it just continue to run? I really don't think it's going to continue to run early next week, because we are a bit overbought. So some back and filling here, maybe even back a test of 240. But a pretty significant break with some follow through today, and our target price up there is just above 300 there in that wave 5 tap box time and price projection there with our software. So it looks like could be more movement to the upside in NVIDIA as well.
Yeah, listen, that HUBB software, it does it all for you, right? So
yeah, it really is amazing.
Yeah. So the last thing, like, we can't go a week without talking Tesla. And I feel like I can't go a day without talking Tesla. So let's have a look at Tesla.
Okay. Yeah, it seems like everybody wants. This must be it's the most interested. It is not the most loved stock that exists. It is in a qualified 5-way to the downside pattern. And nobody wants to hear that, because everybody loves Tesla. But if you're looking for a positive here, we are holding right here at 180, which it needs to hold. And then you can take a look at the chart, Scott, here. You can see what I'm talking about. We had a pretty nice run to the upside here, nice 45-degree angle, no real corrective moves there, which means that if it happens to break 180, there's no support on the way down. It got down below here and it got right back above it. See how it broke below the 180 and immediately back above it. We can't let it break below 180, or like that's what the longs are saying. And how many institutions on this stock? Everybody does, don't they? And so nobody wants the stock to start looking to go back down to those levels around a 100 or even lower. But that is a distinct possibility if it can't hold 180. As long as it holds 180, no harm, no foul, and we're okay here. But we are sitting right on top of an extremely important level on Tesla. So if you're long Tesla, you got to watch that 180 level. If it starts to break it, you might want to consider getting out. But as long as it holds it there, there's potential of moving to the upside and disqualifying this downward pattern. But respect the fact that it's in a 5-way to the downside pattern, and the fact that we're sitting right here at an extremely important level at 180. That is key.
There's just a question, we've had quite a few questions come in, but one's just come up as relevant now to this. Is that perhaps an inverted head and shoulders on Tesla?
Yeah, that's a pretty good catch there, isn't it? So you can take a look here at the support line and shoulder, left shoulder, head, and I obviously somebody wanted it's a bullish take, right? That what happens is when you have a head and shoulders pattern, an inverted head and shoulders pattern, you go from the neckline to the top of the head. So in this case, you go from the neckline down here, and then that's the amount that you look to move to the upside if it breaks above here. So, and I would agree with that. If it can break back above 220, then we probably get back to the recent highs back in September or so of last year. And that would be about the same measurement that we have here from breaking the neckline up there. So it's a valid question. It's a valid point. I would just submit that it's got to get above 220 before we start talking about some sort of a significant move like that. But it's possible. Anything's possible in the markets, and especially today.
So we talked about this last week. Usually when there's confusion in the market or doubt, you sell. Bitcoin has had an incredible week. What's going on there?
That is a fantastic question, Scott. I mean, look at that. There's Bitcoin. Holy cow. Just when everybody again was writing them off for dead, kind of the same thing that we talked about with Meta, Facebook. So we're sitting down here at the beginning of the year at 16,000, and now we're up above 25,000, right around that area. And when I condense this down, you can see I like to condense it down to where we get into the blocks of 4,000, because you can clearly see these levels. It's almost like clockwork. So there was support at 16. We go up and we hit 20. We break above that. It holds it. We test it here, and then we just tested it again about a week ago, and then breaking back to the upside here. So when I condense the chart down, it doesn't look quite as spectacular. But the fact that it's above 24,000, and the majority of people view Bitcoin and the cryptos as like heavy risk type of assets, but when you take a look and you spread it out to more normal type of viewpoint here, that is extremely impressive on the move on Bitcoin. And the fact that it's held above 24,000, it looks like it wants to go to 28. I'll turn the Elliott wave pattern on, and you can see, look where the target is, right at 28,000, which is that next block of 4,000. So holding here, but that rocket ship to the upside there was amazing. And what is this, Scott? I mean, are people now so fearful of our own money that they are going to digital currency? Or what? It's hard to kind of justify what's going on. Now, we do have the halving situation that's supposed to go on in first quarter next year, which Bitcoin historically, every time they've done one of these halving things, it has had a rally. Is this the beginning of that? Is this the beginning of the rally because of that? But all the cryptos are rallying, even some of those obscure ones that we thought probably would have been gone by the wayside by now. So it really is a question of what is going on, and if people are looking to hide in digital currencies because they're concerned about what's going on with regular money in the banking sector, it's really good chatter and speculation here to figure that out. But from a risk standpoint, you would have thought it would have been the opposite, wouldn't you, Scott? Yeah. I mean, we're worrying about everything going on with all these banks, and risk seems to be coming off, but then it rockets to the upside. I don't know. I don't have the answer, but that was mind-boggling to see how fast that moved up.
Well, it's interesting. Another comment coming through here that the HUBB software was actually forecasting that move based on Elliott Wave.
It was in a 5-wave pattern, and there you can see the target's still there. We're almost there. I mean, the high that occurred back there on the 14th has already hit the lower level of this forecasted box. So we're right there. Usually it goes into the middle, but it doesn't always necessarily hit the midpoint. But we got there and backed off, and I'll put the moving averages on, and you can see that a bit overbought, but not so significantly. It was a couple days ago. But if you want Bitcoin to stay strong, this is exactly what you want to see following a big vertical move like this. Vertical moves always make me nervous because quite often something that goes vertically to the upside comes vertically back down. But if you want a consolidation, this is what you want. You get a vertical move, backs off a little bit, consolidates above support, and a few more days of just churning through here before trying to take another run higher would be ideal. But that one really blew me away.
So about being blown away, listen, inflation is out of control. Talk to me about the CPI report. Is it ever going to calm down?
I read something, Scott, that said, and it was a forecast by an economist that was really smart. And here's, the CPI report did come down a little bit. Mortgage rates, if we take a look, let me bring this back up and I'll show you a chart of the yield curve real quick, because I think that's important to see. And you can see that that report said that interest rates on mortgages ticked up, and there it is. You can see the long end of the curve here has ticked up. We're still inverted, and we've been inverted for a long time. But at least that's something that's a little bit constructive, that the long end is coming up. And is it because of the fact that the CPI was a little bit cooler? And if we take a look at the actual chart of the CPI, which is right there, there's the chart of the CPI, and you can see how we have come down. There's the tick to the upside, and we're moving back down. But what I read was, and this was somebody that stated a whole lot of numbers, and they actually interviewed Powell when he did his testimony in front of Congress, that said that based on their calculations and based on history, interest rates would have to go to 10% for the Federal Reserve to achieve getting inflation back down below 4%. How does that sound to you, Scott? You ready to go back to the 70s with double-digit rates?
But they're talking about they want 2%.
I know, yeah, but if it takes 10 just to get it below 4, how are we going to have to go to get down? And I think they're going to have to let go of that 2%. I think that's a pie in the sky thing. I don't think that's coming. I don't think that's happening. But at least inflation has ticked down a little bit, but still a long ways to go to get to their target. But if we're looking at the yield curve, a little bit constructive there. So are there glimmers of hope and positives around here somewhere? There are, but you're gonna kind of look into very specific spots to find them, because the majority doesn't look like that. And we showed those bank stock charts of Credit Suisse and First Republic, and when's the next chart going to look like that? And how long can we maintain a bullish bias with all that going on?
Well, let's jump into this, all right? Because we're going over time, but you and I can do that easily because we can talk all day about the markets. but once again, click on that subscribe button. But let's jump into some Q&A, because there's quite a few questions that have come through here, and I'm going to combine two questions here because it's more, and it's the tech names. Crypto is maintaining its correlation with tech, but it'd also be great to look at some of these tech names. Sorry, just go back here. It's a name like Microsoft, got a tech name with a very solid balance sheet. How does Microsoft look to you?
Yeah, good old from the old days, Mr. Softy. Remember we used to call it that, Scott? But look at that chart. So
Wow.
yeah, spot on for whoever's asking that question. That's pretty vertical. But then we get into the area there where I get a little bit nervous when you see that vertical. And it does make you wonder with these big tech stocks, what's going on? Is all the money just rotating into these few big name companies in the tech world, or is there something else going on? The Federal Reserve has been known to buy the S&P before, Is that going on? I know that's getting conspiracy theory, but you have to wonder with these kind of moves. Look at that vertical move. But the key is, if we're looking at the chart, we are in a wave 5. We're at an 82% extension. We're at an area of resistance, and from right here up into those all-time high, or the recent highs back in August, there is not too far away. But this is really overbought from a short-term basis. And I think we're seeing a theme here. Scott, I like to go back to your heavy sell on the close today. There's a lot of these stocks that are quite a bit overbought over these past couple of trading days, and it's just not going to hold like that. See, last time it went vertical. See, this is what concerns me about when stocks go vertical. Last time it went vertically up, vertically back down. So here we are, vertically up. Can it hold this time? Can it try to consolidate, a la what Bitcoin seems to be doing, consolidating a vertical move? Or are we going to fall back below 280? And if we give up the 280 level, we're probably coming back down here to 260. But yeah, you just have to marvel at some of these moves over the past few days and these big tech names.
Yeah, well, it's interesting on that side of it as well. Tesla's pretty well correlated with Bitcoin as well, but it hasn't really moved like your Googles and Microsofts this week.
That's a great point, because they are very heavily intertwined, and for a while they were moving in lockstep together. And you get these correlated moves in the markets, and it's interesting how they work until they don't. And that's the old expression that they seem to do these pairs trades, and then they work, and then all of a sudden they dissipate. But you would have thought with that move in Bitcoin that we would have seen something stronger out of Tesla rather than just hanging on that 280 level. By a cliff there, or the 180 level, excuse me, hanging on by a cliff there.
Let's a question that came in very early, and I want to get to it because I think it's very important to look at this one. Berkshire Hathaway, the Class B.
Okay, Berkshire.
That'd be my accent, like Berkshire. It's sorry.
Yeah, trying to remember the symbol there on the Class B shares of Berkshire. I'll look it up real quick, and we'll pull it up. So I wanted to, interesting, they're looking at, there you go, BRK. Okay. Thank you for that. Appreciate it. And
thanks, Brandon.
So there's Berkshire, and we're sitting here with a churning pattern. It doesn't necessarily, not necessarily the most volatile stock, what I was trying to say, but it is in a 5-way to the upside pattern. We're down here to 50% correction. Hard to ever count out, Warren Buffett out, and he's obviously always on the more conservative side. The way it works with Berkshire is they outperform when the markets are in turmoil, underperform a little bit when the markets are screaming to the upside. So he kind of plays that middle piece in the middle. He doesn't go down as far, doesn't go up as far. And so somewhere in the middle is where he is. And I think that's pretty representative of this chart right now. Been churning here around this 310 level for a while. Let's see what the ADX is. See, it's moving up. Here's an analogy that I use when you see a stock that's been consolidating for a long time, like this has, and you see the ADX start to move up like that. I use the analogy of like a volcano. You look at the top of it, it looks calm and serene, but you don't necessarily see all the lava bubbling up underneath and something getting ready to blow and happen. And that's usually what occurs when you see a stock that hasn't really made a significant move, but that ADX is moving up, and it's made a pretty nice move off of those lows. And yet the stock has dropped a little bit, but it hasn't really moved a whole lot. So I would say that from this chart and based on what's going on with the ADX, something is likely getting ready to happen on Berkshire. It's sitting here on support. It would be a pretty good place for it to blast off from. And according to the Ellie wave pattern, it looks like it does want to make a significant move back to the upside. So I think you have a few little undercurrents there, if you will, that could show that that's a possibility. So I wouldn't be too concerned with this move lower. It does need to hold 290 though. That's key, right where that wave 4 is. If it breaks that, then you're likely going to see 270. What happens when these patterns break? If people that are watching aren't really totally familiar with Elliott wave, but when you have an impulse pattern that breaks down, it gives up the entire impulse. So what would occur here is if we break down below this level and the wave 4 doesn't hold, is the entire impulse move in that wave 3 would be given back, which means we come back here to the beginning, back here to the start, and that would bring it down to 260. So that's a possibility. But Berkshire is usually in Coca-Cola, McDonald's. They're usually in those safety stocks that when things get a little bit confusing in the markets, that's where the money tends to rotate. So I could clearly see that this could be a point of support where it moves higher from here.
Well, we definitely know they're not in Bitcoin.
No, Charlie Munger, boy, did you hear his comments? Ooh,
oh yeah, he really
lashing.
doesn't like
it. Yeah, he hates them.
All right, interesting name this week. They had earnings. FedEx.
Oh yeah. So are we still gonna keep shopping? Amazon's doing okay, so it seems like the shippers should still be doing okay as well. Clearly, as evident by that. And we're still spending. The consumer's still spending, so we haven't stopped doing that. That's an amazing move. And here we are again. So vertical, big gap up. I'm a believer that gaps get filled. Statistics say 94% of gaps get filled. The key is you don't always know when. Sometimes they come back and get filled immediately. Sometimes it takes a while. This gap here that occurred back in February, you can see that got filled pretty quickly. So we gap up, went sideways for a bit, came back down and filled it. That's a big one there. It's overbought. The 10-day moving average is way down here, just above 200. So I wouldn't be surprised to see some give back next week in FedEx. But certainly that was the positive news from the consumer side of things. If the consumer in the U.S. is amazing anyway, right? I mean, we just spend, we don't care about debt, whatever. We just spend like crazy. And if they're still spending, that's a good sign. So there are, we've pointed out a few of them, Scott, I think, of places that with all this craziness and all the fear that's been going on from the finance and banking sector, there's a few places that are showing that there's still some positives out there as well.
Yeah. Because I remember back in September, like if you look back in that chart, like when I was either the CEO or the CFO freaked out the market in that big, quick drop.
Yeah.
But as you're talking about gaps, I went back and filled that whole gap in the whole way.
It did, yeah. See, there's a big gap down. That took a while, right? It took several months, but it eventually got back up and completely filled it. Yeah, there was, boy, he caught a lot of negative publicity for that back then. But yeah, it's managed to recover, and pretty impressive move today for sure.
Yeah. One last question. So it's probably a little bit of a double one, but we'll probably look at a couple of things with this one. But how does the outlook for energy look, particularly Devon Energy, DVN?
Yeah, the whole energy sector, maybe we should look at oil real quick too, to give an idea. In fact, I'm going to bring up oil and then I'll come back to DVN. The whole energy sector, whether you're talking about oil, UNG, natural gas, or whatever, that seems to be telling a whole different, and again, here we go with conflicting signals, right? This seems to be telling a whole different forecast of where demand is going to be. And USO has dropped significantly. It was holding 65, as you can see, with support for a very long time, and it broke down below that. We're going sideways here at 60, and at least the rhetoric that you read about it is because the expectations are moving into a recession with everything that's going on, rates going up, et cetera. There's going to be less demand. So from a demand standpoint, we get this big move to the downside. It's trying to consolidate itself around 60. We're well below the 10-day moving average, so we got oversold. There's another gap down. So when you look at that, it's hard to imagine anything in the world of energy that's going to be doing okay. It just seems to be totally the exact opposite of what's going on in the tech world. And it does make a little bit of sense because tech is so tied to interest rates, as we discussed earlier. But look, those charts look very similar, don't they? I mean, you can see that big move down, exactly what was going on in USO. And so if we can't get oil, natural gas, and the other big players in the world of energy, I don't think any of these individual energy stocks are going to be places that you want to look, at least for the long side. In fact, it's oversold right now. but that break below 50, and then we had this big run here. There's not really significant support for this stock until down around 40, which means it may not be done going to the upside, or excuse me, to the downside yet. So maybe we consolidate here, even come back up and test the 10-day moving average. But I would not be shocked at all to see DVN down around 40. I think that's probably where it's headed. But it's so oversold now, it could take several trading days for it to calm down a little bit. I think that's where we're going there. And it's a confusing world out there, right? It's a stock picker's market, Scott. I mean, that's where we are. You got to look for the strength and stay there.
Yeah, 100%. That's the right definition. It's a stock picker's market. But we are well over time, and I'm okay with that because we really had a lot of fun. These shows are going to be every Friday, 5 o'clock. We're here. Come in, ask your questions. We're happy to help you out. Check out the Hub at hub.com. Great software. You see the software we just went through today. Look how easy that was, Rob. You've been playing with this software for a long time, right?
I have been. I've been using it for a very long time. It's the best Wave software that I'm aware of that exists in the market. So if you're out there and you're interested in Wave, this is the software you want to use. I've tried every one that I know to exist. I'm always careful about saying that because there may be a couple that I don't know about, but every one that I know to exist. And look at the forecasts. I mean, even the viewers were pointing out how accurate it had been. So yeah, it's an extremely helpful tool in trying to figure out, especially in a world like this, where things are going.
Well, thanks very much today for Rob. It's been a great show. We've covered so many topics. Tune in next week for the show. With knowing what could happen this weekend, we have another crazy week ahead of us. But have a great weekend.
Let's hope it's a little calmer weekend this weekend, Scott, versus what we were dealing with last weekend. We had no idea what was going to happen on Monday. So let's root for a little bit of calm and a more normal open.
Well, let's go grab a Guinness and celebrate St. Patrick's Day. And don't forget to subscribe, everyone. And don't forget to check out hub.com. So until next time, everyone, have a great weekend.
Thanks. Take care.